Good afternoon, ladies and gentlemen, and welcome to the KAPE Technologies final results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply just type in your question into the box and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and your attention would be greatly appreciated. And I'd now like to hand over to Idel Eckelman and Moran Laufer from KAPE Technologies. Good afternoon to you both.
Good afternoon. Thank you, Mark, and welcome everyone to our final result presentation. And we are very glad to see so many of you joining us today, and I hope we cover both the performance of the business in the last year and the strategic developments. We'll give you further color on the acquisition we announced a couple of weeks ago. I'll go through all the presentation, and I know that I'm sure that you will all have questions, and we'll make sure that we have enough time at the end to go through all the questions and answer as many as possible. 2020 was a very good year for KAPE. We continue to progress rapidly in building KAPE to become one of the leaders in the fast evolving digital privacy market. We crossed the 2.5 million subscribers. In total, $122.2 million of revenues, and adjusted Ebitda that exceeded our expectation of $36 to $38 million compared to the $39 million final Ebitda number. Retention rates continue to progress, and overall we are very strong on track and continued our growth profile that started back then in 2016 with a view to build up fast-growing business that is still profitable and cash generative. This is the 6th year since we made a big change in the strategy. 2020, our objectives for the year were: 1, to continue to grow organically fast; secondly, to finalize and complete the integration of private internet access, a business that we acquired in December 2019, and thirdly, to develop further our product in order to start and put more and more focus on building our average revenue per user. Overall, we had a lot of very good progress in all the 3 strategic objectives. We achieved more than what we planned, and for sure what we communicated to the market. Visibility of revenues continued to progress, and we finished 2020 with $110.5 million of future revenues coming from existing users. This is up from $98.8 million in December 19. We finalized the integration with the private internet access and realized the synergies of $6.5 million in 2020 compared to the initial estimate of $3.5 to $4.5 million. Crossed the 2.5 million subscribers with further increase to retention rate to 83%. Launched the CyberGhost Privacy Suite during 2020, as well as other significant product releases that puts us in a very strong position to drive forward cross-selling initiatives. And last October, we completed the successful and significantly oversubscribed fundraise of $115.5 million that partially was used to buy out the shares from the PIA founders, as well as to fund the Web Silence acquisition.
On the financial side, we had another year of very strong growth, starting with revenue that increased by 85%. From 66 million in 2019 to 122.2 million in 2020, and that includes a very healthy organic growth in all of our core business units, as well as a full year contribution of PIA, the acquisition we did in December 2019. Adjusted EBITDA grew by 168% to 39 million from 14.6 million in 2019. Similarly, operating profit was up 158% to 10.7 million. Ebitda margin exceeded our expectation. We've guided for around 30% Ebitda margin in 2020. We achieved 31.9%. And that's mainly because we've managed to realize cost synergies from the integration of PIA faster than what we've expected. A very successful integration we did in the year. Net profit increased 28.9 million from 2 million in 2019. That includes a one-off tax benefit of 25.6 million. What we did is that we restructured the acquisition of PIA in a way that allows us to recognize amortization of the intangible assets for tax purposes. We did that through the buyback of PIA founders' shares in October 2020. Overall, the tax benefit from that transaction is 50 million that will be realized in the next few years. 25.6 million of it was recognized in 2020. Fully diluted EPS grew by 771% to 14.8 cents from 1.7 cents in 2019. And I think the biggest change that we had in 2020 is in the adjusted operating cash flow. And in previous years, 17, 18, 19, our strategy was to reinvest our operating cash flow back into growth, back into user acquisition. Our subscriber base grew, even if we exclude the acquisition of PIA, from around 150 subscribers to around 1.5 million, so tenfold increase in subscriber base. And we saw the fruit of that in 2020. So we started the year with a very big subscriber base, which generated a lot of revenue from renewals and the existing subscriber base. That caused operating cash flow to increase from 1 million in 2019 to 20.4 million in 2020, and we expect this trend to continue. Cash conversion from EBITDA will continue to increase, and the portion of revenue from renewals from total revenue will continue to increase over time. Overall, we finished the year with a cash balance of 49.9 million, and if we deduct the debt that we took in order to fund the purchase of PIA, a net cash balance of 11.1 million at the end of December.
The market dynamics continue to be very strong. When we started to focus on helping people to live a more secure and private digital lives, we identified that protection of online information will become more and more critical with consumers around the world. We see in different market studies, those numbers are a market study that was done in North America, but a lot of people concerned by losing control on their personal information. They want to be able to limit the ability of third-party organizations collecting, monitoring, tracking, and profiling what they do online. We see in the recent year a very large proportion of cyber attacks targeting consumers. Hundreds of millions of consumers around the world suffering from data leakages, and in every aspect of the industry, even if we take one example, and this is the same chart that we are showing, I think this is the third year in a row, there is a continued increase in demands, interest of consumers to be more informed, better educated on what they can do in order to improve their digital privacy and digital security. 2020 was an unordinary year due to the result of due to the COVID-19 pandemic. We were, as a business and as an industry, the impact was positive as a result of COVID-19, only because much more people spending more time connecting to unsecured Wi-Fi connections, working much more remotely. Obviously, there was a drastic change in how organizations work, and freelancer, SMEs, and consumers that are our main target market had to shift to and continue their business as usual, not as usual, but working from remotely. Overall, COVID-19 was an accelerator to the growth in the market. We've seen it very clearly since March last year that there was an uplift in demand for especially encryption software and protection of unsecured Wi-Fi networks. And we started this year, and the same trends of very strong underlying growth in the market continued very strongly. KAPE as a consumer SaaS business, we focus from one end to build up a very strong lifetime value, which is a combination of high retention rate and increased and high average or the average revenue per user. And from the other side, we would like to minimize the customer acquisition cost. On building up the lifetime value, we had a very strong progress and improvement in the retention rate over time. Reminding you that when we started in 2017, the average retention rate was around 65%. 2020, we reached to 83%, our best level ever, which is a combination of a lot of improvement that we've done throughout the year to build up our technology infrastructure and product to be able to deliver high quality of service that is completely secured, stable, fast, and private internet connections. In addition, we took an approach in 2018 that we want to build up a very strong platform that will offer the complete solution to any touch point of our customer digital lives. We launched the CyberGhost Privacy Suite as a beta, in a beta mode in Q2 last year, and for a full release during Q3. And so far the results are very strong. We see that more than 10% of the new sales of CyberGhost are people choosing to buy the suite solution and paying almost double the price compared to the standalone VPN application, which gives us a very strong confidence that we will be able to drive up the average revenue per user from about $40 to $50 per user per year to across the $60 12 months from today. And it's very encouraging. In the digital security, by the way, 15% of the sales in 2020 were people buying the PIA VPN solution as well, which resulted in an increase of more than 15% in the average order value. So we had a very good progress in building up the average revenue per user, and we are very confident that there is still a significant potential to increase it much more, which will be another lever for additional organic growth, a further improvement in margin, and a very strong impact on our operational cash profile or on our cash profile. Another area that was for us significant in 2020 is to complete the integration with private internet access. We completed the merger with PIA in December 19, and the investment model with PIA was a combination of two things mainly. One is a consolidation play. We wanted to improve our market position in the US and have greater market share in the North American market to realize cost synergies. And with that regard, we had a very strong progress. The integration is now done. We realized $6.5 million of cost synergies compared to the initial guidance of $3.5 to $4.5 million. This is the main reason for the fact that we exceeded our adjusted Ebitda target for the year. And what is beautiful about the consolidation and the integration between KAPE and private internet access, that it was not reduction of headcount. 97% of the employees of PIA at the time of the acquisition, if I exclude pre-planned departures, are still with us. And not that they are still with KAPE today, a lot of them taking very important roles in the organization. If it's the CTO of PIA that is now the VP R&D of our digital privacy division, the CEO of PIA that is heading our operation in the US, that is our biggest market, and a lot of others that now taking wider responsibilities in the KAPE group. And where we focused and we assumed, as this is one of the main underlying assets of KAPE, that as we identified with KAPE, even before the acquisition of PIA, that one of the things that will enable us to drive high level of services is to create a scalable network of servers that will offer millions of subscribers a high level of service, but still be efficient in some of the cost per subscriber. We had a very strong progress both since 2017, 18, 19, and 20. In 2020, we implemented the infrastructure into PIA, and you can see that since June 2020, we were able to reduce significantly the cost of the infrastructure per subscriber, which resulted the cost synergies and in a greater magnitude than what we initially estimated. Another area to the investment model is the acceleration of growth of PIA within the KAPE group. As you can see on the chart on the upper right, since we started to push forward on the integration program with PIA, we were able to ramp up the amount of subscribers sold for PIA through the paid user acquisition platform of KAPE. Every month we were able to increase the numbers, and in December 2020, we crossed the 15,000 subscriber sales of PIA on top of the organic growth of private internet access, which that, just to give you a sense, on an annualized basis is already above 15% growth compared to single-digit growth of PIA pre-acquisition of KAPE, which is very encouraging. It's happened quicker than what we expected in the model. In the model, we expected to be in this level only in the middle of 2021, which is a great result. And what is more encouraging, that it's the third time since the third acquisition that we did, and were able to enhance the growth of the businesses that we're acquiring significantly more than what they've done pre-acquisition. It's happened with CyberGhost, that we took the subscriber base from 150,000 in 2017 to over 700,000 at the end of 2019. It happened with Integra, that we took from the subscriber base from a single-digit growth to close to 30% growth in subscribers in 2020. It happened now with PIA, which puts us in a very strong position when we go and speak with target companies that could help us to expand the product offering further. Our cohort analysis, this is the chart that we started to show in 2017, the evolution of our subscriber base, of our core 4 subscription solutions. In 2020, we continued to grow rapidly. And what is more important even is that the mixture between the newer cohorts, the cohorts of the last 2 years compared to the more mature cohorts is very healthy. About 40% of our subscribers joined us the last 2 years, and around 60% of our subscribers joined us at least 3 years, still with us at least for 3 years, which this is another driver to the improvement in the retention, because as the more mature the cohort, the higher the retention. The North American market becoming more and more significant for us. It's the largest market of our industry. 53% of our revenues in 2020 were generated in North America, and the rest from Western European markets, Australia and Japan. We intentionally choose to focus on markets that drive high lifetime value because it's critical to our operational model. We want to build up high lifetime value. We want to optimize as much as we can the customer acquisition cost, and this is related to the acquisition we made 2 weeks ago, and I'll give you further color later in the presentation.
Looking at our income statement, out of the 122 million total revenues, around 75%, 90 million, came from our digital privacy segment, actually tripling the revenue we've generated in 2019 from this segment. And that was achieved firstly from the contribution of PIA that contributed 50 million of revenues that were fully booked in that segment, and a very healthy organic growth from our existing products, mainly CyberGhost, that continue to grow year on year with a very strong double-digit growth. If we look at the segment results of the digital privacy, segment results is a non-GAAP metric we use. It's basically gross profit less direct marketing cost or user acquisition cost. We can see that the segment results grew by 240% to $52.8 million. And the margin has improved in that segment, mainly because the existing subscriber base in the beginning of the year was much larger than 2019, and the portion of renewal revenue is much higher. In the digital security, we have two opposing trends. On the one hand, we have the PC performance products, the driver fix, restore products that are the purpose of these products are to rectify malfunctioning Windows operating systems. It's a more one-off use by nature, and therefore the revenue is less recurring and the lifetime value is lower than the other products in our portfolio. We made a decision to shift our focus from these products to the more recurring revenue product in the digital privacy segment and the endpoint security segment that is part of the digital security. And that brings me to Integra Endpoint Security, which grew in revenue by 9% in 2020, but grew 28% in subscriber base. Most of the growth in subscriber base was achieved in the fourth quarter, and that will drive further revenue increase this year and in the following years. Going forward, we expect Integra to grow at least 25% yearly. Overall, we expect the digital security to resume growth in the second half of this year and grow healthy double-digit going forward. Looking at our operating expenses, so following the integration of PIA, KAPE is now a much larger business. Operating expenses was increased by 44.7%, mainly an increase in investment in R&D that grew by 50% and drove our product roadmap. We've released several significant products in the second half of 2020 and January this year, when we released officially our privacy suite. Going forward, we've budgeted for another 15% increase in investment in R&D this year, and going forward, we expect it to be a nominal increase of around 3 to 5%. That brings us to adjusted Ebitda of $39 million, an increase of 168%. And as Ido mentioned, improved margins of 31.9%. Going forward, we expect margins to expand gradually this year towards the 35-36%, and then in the next few years, stabilize around the 40+% Ebitda margin. Moving on to our cash flow statement. Adjusted cash flow from operations was $20.4 million in the period, significant increase from 2019 as the proportion of renewal revenue from total revenue is increasing. The way the unit economic works for our business is that we pay a one-off marketing fee to one of our marketing partners that drive traffic to our website and get a customer to purchase one of our software tools. After we pay the one-off fee, we generate revenue from that subscriber, that user, throughout his lifetime. So that's the initial contract period and any expected renewals. In our case, we, on a conservative basis, expect the user to stay with us for, on average, between 4 to 5 years. The way IFRS makes you account for cost to obtain a contract, which in our case is marketing cost, is to expense it over the lifetime of the user or the subscriber in a similar way that you do with revenue. We take a very conservative approach and expense our marketing cost over an average of 22 months. But at the end of each year, we have a certain amount of user acquisition cost that goes to the balance sheet. And since we are growing very fast, as I mentioned, from $155 1,000 users to around 1.5 organically at the end of 2020. We have around 23.2 million in 2020 that went to the balance sheet. We treat it as investment in growth because it is cost that is attributable to revenue that will be recognized in future period. If we exclude this investment in growth, our adjusted operating cash flow was 43.6 million in 2020, which represents a cash conversion from EBITDA of 112%. We have a negative working capital because we collect the revenues from the customers in advance. For example, customer that purchase a 1-year subscription or a 2-year subscription pays at the point of sale for the entire period. And we pay to suppliers generally on a net plus 30 days basis. Looking at our investing activities, we had a deferred payment of 5.8 million for the acquisition of PIA in December 2020. We have another payment of 15 million December this year, and that will be the last payment for the acquisition of PIA. Other than that, capital expenses include mainly R&D, investment in R&D. The capitalization was 2.5 million in the period, a similar amount to what was capitalized in 2019. And despite the fact that we are increasing our investment in R&D, we keep the R&D capitalization flat at 2.5, and that will be the amount more or less in the next few years. Looking at the cash flow from financing activities, so two major events that worth mentioning. Firstly, refinancing of a bridge loan we got from a major shareholder in December 2019 for the acquisition of PIA from a three bank club, consists of Bank of Ireland, Barclays, and Citibank, reducing the cost of debt significantly. Our current margin is 2% over LIBOR, a very good terms. And we plan to do the same thing with the bridge loan we got for the acquisition of Webcellence earlier this month. We got an 85 million bridge loan from a major shareholder, and we are in process with discussions with the bank to refinance it and upsize the facility we get from them in a similar pricing to what we have in the current bank facility. We expect to finalize it in the next few weeks. Other than that, we've successfully completed a capital raise in October this year, raising 115.5 million and a net proceeds after issuance cost of 113.2 million. Out of it, we used 72.5 million to repurchase consideration shares from PIA founders, which by that we've achieved the 50 million tax benefit I've mentioned earlier. Overall, if looking at our balance sheet today, after the acquisition of Webcellence, our net debt balance is around 107 million, which represents a leverage on pro forma EBITDA of 1.6 times EBITDA. We expect it to decrease to around 1 time EBITDA by the end of 2021, and excluding any further acquisition, be with a minimal net debt by the end of 2022, which will give us headroom to execute on further acquisitions by the end of this year.
Beginning of this month, we completed the acquisition of Webcellence for an overall consideration of $149.1 million, part cash, part shares. The shares element is $32.5 million of shares that we will issue following the general meeting we are holding tomorrow. Webcellence is a big step forward in our strategic roadmap. What Webcellence were able to do very successfully in the 10 years since the two founders launched the business is one of the strongest and proven organic marketing platform for software solutions in the digital privacy and security verticals. They operate selections of websites that produce high quality of content on large and wide topics that are digital privacy and security related. When the two founders started the business, they identified the growing demand and the growing interest of people to learn more and be better educated on how best way to improve their digital security and digital privacy, and decided to do it in a different way to most of the marketing platforms in the industry, and focus mainly on driving organic traffic that it will be driven to the high quality of content. Organic traffic, when we say that, is traffic that is not attached to it's not a paid traffic like most of the other platforms in the space. Obviously, much harder to create, but once you reach to a scale, it's very profitable and create very strong entry to barriers and very strong competitive advantage. The reason that Webcellence were able to do it so successfully is a combination of few things. First of all, the focus on high quality of content. They were able over the years to build up a network of more than 400 content creators and a very large cybersecurity research team that write content on a lot of different topics and analyze and try to find vulnerabilities on the various software solutions in the market. Another thing that they've done, unlike a lot of competitors that immediately focused on the English-speaking market that are the largest market of the industry, they took a different approach of highly localizing the content, entering and gaining dominancy on more than 30 markets around the world, and only then, after they build up very strong positions on the two large search engines and on wide list and long list of search-related terms for digital privacy and security, they entered very successfully the North American market and the market here in the UK, and it's all driven by a very strong BI platform that gives them a lot of intelligence to optimize the reader journey, to decide on what areas will create the greater interest of readers and where they can help people to build up better the knowledge around digital security. For us, it's a highly strategic acquisition for various reasons. One, it complements us exactly an area that we needed to be stronger in order to realize the full growth potential of KAPE, in parallel of having strong paid user acquisition capabilities to build up one of the best or strong organic marketing capabilities. Second, it brings us much closer to the end user. The insights driven from the platform will play a significant role in our product strategy going forward. And lastly, from pure financial perspective, the deal is significantly earning enhancing immediately, and the accretion to EPS in 2021 expected to be 65%. Now, Webcellence and KAPE are working very closely since 2017. We met the two founders of Webcellence shortly after we acquired CyberGhost in 2017. We already knew that they're trying to do something very interesting to build up a scalable organic marketing platform. And in 2017, it was the first year that Webcellence started to show signs of a strong positions and very efficient source for sales in our verticals in the digital privacy and security. And since then, they've grown significantly to generate $64.5 million of revenues in 2020 with $30.7 million of adjusted Ebitda, that and a very high cash conversion that obviously will impact very positively the group. Over time, KAPE became a significant client of Webcellence. In 2020, out of the $64.5 million, KAPE contributed $7 million, with a budget that this year is going to $10 million. And it's all a result of the very strong quality of potential customers generated through Webcellence with very high conversion rates. More than 200 different vendors working with the Webcellence and dependent on the sales generated through the platform. They were able over time to build up a very strong position in the value chain and there is a reason why they are able to generate such a healthy profit margins. Our plan with the Web Excellence, so first of all, it will serve as an important organic marketing platform of KAPE in parallel to our very strong paid user acquisition capabilities. It completes a very important piece in our strategic roadmap that will enable us to realize the full growth potential of KAPE and put us in a very strong growth trajectory. And moving one layer up, we already have a very strong product portfolio that drive high quality of earnings with very high retention rates, and we will continue to expand the product offering even further, and all under two main product brands, Private Internet Access in the US and CyberGhost in Europe. The immediate impact of consolidating Web Excellence into the group is a reduction of 16% in the customer acquisition cost, which is great, but it's not good enough. Our goal is that if today our sales split between 70% through paid user acquisition channels, 30% organic channels, we want in 2 years from today to be exactly the opposite, 70% organic, 30% paid, and the Web Excellence will play a very important role by deploying the know-how and the BI solutions into the digital privacy and security segments of KAPE. We expect that very quickly we'll be able to grow the volumes of organic sales, which will impact very positively the unit economics of the group. In addition to that, our plan is to report Web Excellence as a new segments in parallel, in addition to the digital privacy and security segments. The two founders of Web Excellence, as a combination of the shares we are issuing them, as well as the shares that they will buy in the secondary market, expect to own more than 5.5% of the shares of the KAPE shares. They will continue to run and manage Web Excellence as an independent business unit in the group. We don't have any intention, and this is not the reason we've done the deal, to promote the PIA and CyberGhost brands further into the Web Excellence platform, but we do want to deploy a lot of the know-how that exists in Web Excellence to build up high volumes of organic marketing and organic sales into the digital privacy and security segments. We are now in the second week since the acquisition, and so far it's all going on track. Another thing worth mentioning, that the feedback from the industries and the other brands that work with Web Excellence was positive, and we expect that obviously nobody likes to lose sales, and the brands that we are working with gave them the right comfort that there's no intention of KAPE to utilize Web Excellence just to promote PIA and CyberGhost, the other way around, and we expect Web Excellence to continue to develop their business and operation within the KAPE group. And so far, obviously, we're just at the beginning of the process, but it looks very strong. Guidance for the year, this is on a reported for the full year, i.e. from the 5th of March, the date we closed the Web Excellence acquisition. We expect to generate revenues of $197 to $202 million in 2020, continue with our approach to grow the top line in a profitable way, and generate adjusted Ebitda this year of $73 to $76 million. Overall, now it's the 6th year since we made a significant change in our strategy. In 2016, we generated $38.2 million of revenues that close to zero came from a recurring or were a recurring revenue by nature, driving 14.9% of adjusted Ebitda. As we progress in the execution of the new strategy, we started to grow the revenues and enhance and build up very strong recurring revenue. In 2020, out of the $122.2 million of revenues, 90% are subscription recurring revenue. and adjusted EBITDA margins expanded over time to 31.9%, more than double the adjusted EBITDA margin in 2020, and we expect it to continue to go to 35-36% this year and grow further and stabilize above 40% in the next 3 years, only because the proportion of revenues coming from renewals is growing over time, but will impact the further continued expansion in margins, as well as the scale in the operational cash flow. We completed the acquisition of private internet access. We couldn't be happier with the way PIA was integrated into the group, both in the realization of cost synergies, as well as the enhancement of PIA growth within the KAPE group. Product development progressed very strongly in 2020, and this year we expect that we'll start to see a higher average revenue per user. If until this year our main and only focus was to build up the subscriber base as fast as we can, this year we'll see continued growth in subscriber base, as well as uplift in the average revenue per user. We will, over the years, we build up a very strong track record, not just to buy and execute on acquisition, but to integrate properly businesses that we are acquiring. And we will continue with the same approach to prioritize organic growth, but to execute on earning enhancing acquisitions. And don't expect any significant acquisition to happen in the next few months, because we are busy now to make sure that the integration of Webscience is going well and completely on track. But we will continue. We are still in acquisitive mode. We have now around 10 different targets on our list that we engage with the management, monitor the progress, and building up the investment case. And we will continue with the same approach as in the last 4.5 years. Overall, I'm very pleased with the way KAPE was developed in the last 5 years. We are not just confident in delivering our forecast for 2021, we are very happy with the position of KAPE in the market and our ability to be one of the leaders in this fast evolving digital marketing space and to capture significant market share and continue to be a significant player in the industry. Thank you. This is the end of the formal presentation, and then now I'll hand over back to Mark to open up the floor for questions you may have.
Ido, Moran, thank you very much indeed for the update and for your presentation. Ladies and gentlemen, could I please ask you to continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted already today, I'd like to remind you that a copy of this presentation, along with the slides and the published Q&A, can be accessed via your Investor Meet company dashboard, and you will receive an email to notify you when they're ready for you to review. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Ido, Moran, if I could just ask you to open up that Q&A tab on the right-hand side of your screen. I'll just remove the slides and bring you into full mode. If I could ask you just perhaps to start at the top and where you can address any questions. If you could read them out, obviously, that'd be also very helpful.
Sure, no problem at all. So we have a question from Nick. What does the competitive landscape look like, and what differentiates your business from your peers? So the overall competitive landscape is a combination of mainly 3 types of competitors. One are the more traditional internet security companies, the large antivirus groups that they are all trying to enter the digital privacy market in the last few years. But the main thing that limit their ability to really become a digital privacy market and gain significant market share is the fact that they are still very much dependent on the freemium model, meaning that most of their clients are free users. And to change the operation model and change the infrastructure to become a truly digital privacy player that protect the information of the users is very hard, because they still make a significant amount of revenues from selling data and distributing advertisement. From the other side, there are companies that some of them doing a very good job, but still stayed more of a point solution provider. Could be in the password manager field, VPN, vertical, endpoint security. For us, it's the ideal acquisition targets. And the reason that they are struggling and they really were not able to compete with the same level and expand the subscriber base significantly is the fact that the market changed. The market becoming more mature, it's a mass market now, and people are looking for providers that can offer the full suite of solutions that cover the different aspects of their digital lives. And the fact that KAPE and some of our direct competitors were able to make this change, plus the fact that we very early on identified the need to have a scalable infrastructure to provide a fully secured, private, stable, and fast internet connections, puts us in a very strong position. And as a result, we increased prices twice, right? Twice in the last 6 months, plus the fact that we are able to sell the suite solution in a higher price that will drive further improvement in the average revenue per user, puts us in a very strong position. And a lot of small, medium size providers are either disappearing or being consolidated by the larger group because they are not able to compete in the same level of service with the more established providers, and people keen to pay, but they want to get a high quality of service. And KAPE today, our differentiation is the fact that we have a very scalable and high-performing tech platform. We are truly digital privacy, and the privacy is already designed as part of the design of our products. The fact that we made the shift from a standalone or point solution to a platform, it's a very big differentiation. And the fact that we are not dependent on anyone on our go-to-market strategy. We have very strong paid user acquisition capabilities. We have very strong organic marketing capabilities following the acquisition of WebSelect. As a consumer business, it's a huge competitive advantage and what enables us to scale up quickly, both firstly in the amount of subscribers and then in revenues, profit margins, and cash profile of the group. Question from Simon. From an organic perspective, are there any new products or offering you are looking to cross-sell into your existing client base? Also, what is your M&A strategy moving forward? First of all, we always want to expand our product offering. As a company, we are R&D-driven company. 44% of our employees are R&D engineers. There are significant R&D projects at the moment we are doing in order to expand the product offering further. I can tell you that we are doing now a lot of work on the area of protection of home Wi-Fi networks. This was a big focus before the pandemic, and after the pandemic, it's even a greater focus, and it will continue to be a significant area that people need to have better protection. Obviously, we are all spending much more time working from home. Most of the people around the world don't have any security to their home Wi-Fi network. They just take the router from the ISP, barely changing the password, and the cyber risk is just growing over time. And this is the area that KAPE definitely should have a very strong offering. Another area, especially in the market, in the North American market, is the protection of online identities. We did the first test launching the CyberGhost ID Guard in 2020, and we see a lot of potential over there, and it's another area that we might do an acquisition in the space in the future. M&A strategy, as it was in the last 5 years, I think that over the last few years that we executed on 6 earning-enhancing acquisition, we built up a very strong track record and experience in not just knowing to structure a deal that will be beneficial to our shareholders, that we know to integrate very well businesses that we are acquiring, realize synergies, and enhancing the growth of the businesses within the KAPE group. We did it, as we mentioned, with CyberGhost from $5 million of revenues to over $36 million in 2020. Integra, that we took from a single-digit growth to close to 30% growth in the subscriber base. Private internet access from a single-digit growth to over 15 or close to 20% growth this year in terms of the subscribers, and we will continue with the same approach. And as I mentioned, don't expect that we will rush now to do another significant acquisition. We are very busy now to drive forward the organic growth and integrate Webcellence into the KAPE group, but definitely we will continue to execute and be acquisitive company. Next question from Abby. Are there any lock-ins or restrictions on the new shares issued to the founders of your recent acquisition, and how do they remain within the business, either in an advisory or operational role? First of all, the shares that we are issuing them are with lockup mechanism of up to 2 years, 50% until the first anniversary, 25% until the 18 months post-closing, and the last 25% on the second anniversary. They are definitely staying with us. In addition to the shares that we're issuing them, they agreed, or they asked, and we agreed, that certain part of the cash consideration, roughly $1.5 million, they will use to buy shares in the secondary market. They will continue to run the Webcellence business within the KAPE group. Absolutely, we want them to stay with us, and we see a great opportunity adding such an experienced entrepreneurs, not just the two founders, but the management team that add a lot of value in areas that we wanted to be stronger, and they are expanding our skill set and managerial bandwidth that will be important and will offer or enable us to grow even faster, especially in the organic marketing side of the business. Next question from Simon. What is your strategy or future research and development? Is this all done in-house? So first of all our R&D activities done in-house. We never outsource R&D. It's core to what we do, and this is our pride. We're R&D-driven business. And as I mentioned, 44% of our employees are R&D engineers, and we have very strong R&D hubs both in Tel Aviv, in Bucharest, Romania, in the US, in Germany, in Paris, and we have a very strong bandwidth and ability to drive forward research and development projects. Our strategy is a combination of a few things, or two main things. One, to make sure we have the best products in all the categories that we operate in, and we're a tech business. We always need to improve and add and make sure our solutions provide high level of service and provide the full protection. And secondly, to expand to new verticals, both from scratch, to develop a research product that will be progressed to a development product and then will be commercially launched, and we did it a few times in the past and we will continue to do it. And this is we've done with all the acquisitions that we made so far, that we managed to improve the technology infrastructure and the product significantly as a result of the very strong R&D capabilities we have in the KAPE group.
Ido, I'm just going to jump in. I think you look to have addressed all the questions that have come in by investors. So thank you firstly to those that have submitted questions. Also perfect timing as we come up to the hour. Thank you very much indeed, Ido. Could I just perhaps hand back just for a few closing comments? I know investor feedback is important to you, and then I will conclude the webinar and redirect investors.
So firstly, thank you everyone for joining us today. We appreciate your interest in KAPE. I can tell you that we as a management are very happy with the progress of the business in the last 5 years. We've grown the business to be very strong, to be in a very attractive position in the marketplace, to continue to grow and build up KAPE to be one of the leaders in this fast evolving consumer cybersecurity market. We are very confident, not just from delivering the numbers of this year and the guidance we gave 2 weeks ago, but to build up the business and continue the growth from beyond 2021 and realize the full growth potential of KAPE. So thank you very much all for the continued support.
That's brilliant. Thank you once again to both Ido and Moran. Thank you very much for your time. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, the feedback page will appear. If you access this meeting via the link sent you by email, you will be simply asked to log back in to submit your feedback. And if you could spend a small amount of time to give the company your views and expectations, that would be very helpful indeed. On behalf of the management team at KAPE Technologies PLC, we'd like to thank you very much for attending today's webinar. That now concludes today's session. Good afternoon to you all.